I've been investing in Microsoft since I was 9 years old in my mind. And Bill Gates has been a legend to me and most Chinese people because he represents hard work, intelligence, and possibilities. He was an idol to all of us because those were the things that we were raised to strive for. I even wrote him a fan mail when I was in junior high. He actually sent back an autographed picture of himself with a Sharpie. That day, I was so excited. I was jumping for joy. You have no idea how excited I was. After 2 decades later, Bill Gates has retired like 3 different times under 3 different positions under the same company. I still invest in Microsoft, both in long trades and swing trades. Microsoft makes up an important part of my portfolio. In this video, I like to share with you what those value props are and how this company can work for your portfolio, specifically in the next 3 to 6 months. If this is the type of content you've been looking for, please hit the like button and let's get started. Why do I think Microsoft is that good? 3 core reasons. One is that they have a very specific market fit of a user segment that is incredibly high value. Second reason is that they have a tech portfolio because they spent 3 decades building it. They have a tech portfolio of a moat that very few companies can compete against. The third reason is that they have the ability to sell in bundles, in bulk. These 3 reasons help propel them forward, and even when they're not innovating, it helps them hold on to the market shares. Let's deep dive a little bit further so that you can fully understand the values that each of these reasons offer. The first is about user segments and market share. If you were raised in the 90s, you would know that Microsoft is all about personal computing, selling Windows licenses. But in the modern version of Microsoft, their core business, about 2/3 of it is actually selling to businesses. This is very, very important because instead of selling to people like you and me, $100, $200 at a time, they're selling in bulk, thousands of licenses at a time for all of their products like Office, cloud storage, remote conferencing, etc., etc. This way they can capture market shares in bulk. It's much easier to sell because now you're selling to the leadership team instead of selling to individuals one at a time. They can capture market shares way faster. And that goes hand in hand with the technology moat they've built themselves. So for the last 2-3 decades, they've been building and innovating and buying companies to create this tech portfolio that falls into this ERP category. And for all intents and purposes, what that means is that they sell products that are core to business operations. You need cloud storage and you need their Office suite for your business to simply function. Those are ERP products. A printer used to be ERP, but now it's not because most businesses don't need to print physical stuff. This is very, very important because that means that their products are important to any business. Businesses are high value, so they're in a key market that will never go away. There's always going to be businesses. And lastly, products that fall in the ERP category are very, very hard to replace. So imagine that you've dumped like a terabytes worth of data into Microsoft's cloud storage. If they decide to up their price, it's very hard for you to move out of it because you're moving like terabytes of data out of your business into a different solution, and then you have to retrain your workforce to learn how to use that particular solution. It's a very, very challenging process, and that's why a lot of companies in the B2B space wants to be an ERP as opposed to an add-on service. And the last important core value prop that Microsoft offers has to do with the fact that they have such a big portfolio of products that are specifically catered to businesses. Because of that fact, they can bundle their solutions and sell all of those solutions at once to businesses. On paper, they're offering businesses a discount, but in fact, they're effectively creating a monopoly of their brand. A business can choose to pay products individually, pick and choose, or they can pay less for a bundle of products from Microsoft all at once. They're locked into Microsoft inadvertently, and they're probably getting a better deal this way. But this also helps Microsoft land deals because you can't do that as a startup, right? You're offering one solution that you've built. Microsoft's going to offer a suite of solutions. Your one startup product is part of that solution. Even if it's a little bit worse, it probably comes along for free. And therefore businesses are going to go for, the brand that they know of, the brand with products that are going to, improve versus a startup that's like, untested, and who knows whether that product's going to exist in a couple of years. Because of those three core reasons, Microsoft is an incredible brand to invest in. The next thing you would do is look at their financials. To put things into perspective, Microsoft's annual revenue can compete with some countries' annual tax revenue. That is incredible. That is absolutely incredible. They also have a ton of cash stored up to help them through any tough situations like natural catastrophes where their workforce might shut down and whatnot, right? Ironically, I don't think their workforce has shut down at all during this global catastrophe because, people are working more remotely. They need the products that Microsoft has to offer. The only alternative I can see is that, certain businesses might not be able to leverage productivity at all and they have to lay off workers. But short of that, everybody still needs to use Microsoft products to move forward. And they might actually have to buy more Microsoft products for remote meetings and cloud storage for better collaboration during this rough period of time. And so I personally am expecting better user growth during this global catastrophe, which in my opinion creates a buying opportunity for the next 3 to 6 months. You should also know that there are two major reasons why you might not want to invest in Microsoft. The number one reason is that we are in the end of a bubble. So that means that, as soon as the bubble bursts, we're probably going to end up in a recession. Some people argue that we're already in the beginning of a recession. I'm not one of those, but it's worth, taking that into account. I'm not going to bet my entire bankroll on the fact that I don't think we're in a recession. We are all investing less because it is a valid concern. And there are valid points to say that we are in the beginning of a recession. At the same time, we have businesses who are still doing pretty well, where there's still value to be had. I truly believe Microsoft is one of them. That being said, if we actually hit that point, the brick wall where the bubble bursts, regardless of what company you're investing in, it's going to tank temporarily, just like it tanked when the COVID lockdown happened. You might instantly lose 20 to 30% again. And if that happens and you're swing trading, and that's, let's say that's a large chunk of your bankroll, you're going to get locked up. It's going to come back eventually, but if you use too much of your bankroll, then you're going to be locked up in a very bad manner. The second thing to watch out for is that we do have companies who are chasing after Microsoft's business, obviously, because that's where a lot of the money is at. And so if a company like Google puts out a news about improved business analytics or improved collaborativity software that Microsoft doesn't have to offer, then regardless of whether it's available or ready for market or not, the market is going to react, and Microsoft's stock will most likely tank for a temporary amount. If Microsoft cannot come up with a rebuttal, then the stock's going to tank even more, right? But because of the size of the company and their historical track record, most likely they're going to either build something or buy their way out of that situation. But again, we're talking about swing trading here, and temporarily that stock's going to tank because of that. That is reasonably likely because Google's always messing with improved analytics, improved computing power. That's in the news all the time. So that's something to watch out for. So I hope this content is what you were looking for. If you have any questions or concerns, please leave a comment below. If you disagree with what I'm saying, please leave a comment as well so we can open a dialogue. I think there are still a lot of buying opportunities out there, but we all need to be more careful because we're at the tail end of a bubble. Like always, knowledge is power, and if we stick together, we can all make some money out of this thing coming out positively. Thanks for listening, and I look forward to working with you next time. Microsoft is like coffee. You start off by buying some of it. Next thing you know, you're buying a lot more of it. Before you realize it, you're addicted to it because it has too many good things going for it. If you don't drink coffee, then you totally miss the analogy and you're wrong.